Billy, and today we're going to talk about permanent insurance. Permanent life insurance is a life insurance policy that you have that is permanent. We plan on it being available and in force, or in effect, in other words, for your entire life. And I was asked the question the other day, what's the best kind of life insurance policy? And the answer is the one that's in force when you pass away. Not to make light of that, but really that's the truth. We don't want you to have a policy that you pay in all these years and then it expires before you do. So there are certain reasons for term policy. Term policies is another type of life insurance, but it just goes for a certain term of time. And a permanent policy lasts for your entire life. So several different kinds of permanent life insurance. Of course, there's a whole life, which probably most people are familiar with a whole life. A whole life policy simply means that you pay a set premium. It doesn't go up or down, and you pay it generally for your whole life. It pays a certain death benefit and never more or less. Whole life policy is a real basic, solid life insurance policy that you just know you're going to pay these premiums for this amount of time, typically for your whole life, and when you do pass away, this is what the death benefit's going to be. That's simple, and that's been a good policy for all these years. In fact, was the original life insurance policy back in the days of life insurance, in Ben Franklin's days, as a matter of fact. The other kinds of permanent life insurance are universal life, and universal life has a couple of different features as well. Universal life is a little bit more flexible. It allows you to have premiums that are flexible. So your premium might be, let's say $100 is what your premium's supposed to be, but this month you're running a little bit behind, the transmission went out, something came up, and you can't make the full $100. So you pay $70, whatever, it's just an example. But you have the flexibility to do that. And then a couple months later, if you want to kind of get caught back up, you can make that extra premium back up. You don't necessarily have to, but it's a good idea to always stay as current as possible. And a universal life also has, or can have, a flexible death benefit. So you might start out with a $100,000 policy, and because of your premiums and the way you pay them, it might actually grow to be $200 or $300 or whatever the amount is. But you have that flexibility. So when you think about a universal life policy, think about a policy that is flexible. It has a flexible premium and a flexible death benefit. And then you have an indexed universal life policy. And an indexed universal life policy, or an IUL, just simply means that the premiums that you pay in are affected by an interest rate that is tied to an index, like the S&P 500, the Dow Jones, something like that. Now, you're not directly invested in the stock market or in the Dow, but the life insurance company simply puts your money into a bucket, if you will, that mirrors the growth of the stock market. So, for instance, if the stock market rose 10% and your policy had an 8% cap with an indexed universal life, your money would grow up to 8%. So you don't get the full 10% of the gain that year, but here's the nice thing about an indexed universal life. When the stock market tanks and your 401k loses money, your life insurance, your indexed universal life, goes to zero interest. So you don't lose anything. You may not gain anything that year, but you don't lose anything. And I don't know about you, I like nice big gains, but I'm kind of conservative and I don't like losses. So for me, and maybe for you as well, taking a little bit less gain so that we know we're not going to take any loss, that makes sense in this particular case. That's an index universal life. That's really the nuts and bolts of it, just fine-tuned. Another universal life is called a guaranteed UL, or guaranteed universal life, and it simply means that similar to the whole life policy, you pay a certain death benefit. You pay a certain premium for a certain amount of time, and then the death benefit is always guaranteed, even if you live to be age 100 or beyond. So that's a nice policy. I usually look at those for people that have another type of permanent policy, which is called a final expense policy. And a final expense policy is a little bit more expensive generally. It's for a smaller amount. And so usually a final expense policy might be $5,000, $10,000, $15,000, where a GUL, a guaranteed universal life, might start at about $25,000. So if somebody had a couple of little final expense policies and they wanted to combine all of those premiums and get one policy that had a larger death benefit than all of them, probably we would look at a GUL and see if that didn't make more sense. So permanent policies do have their place. Term policies have their place too. And so neither one is right for every person. But I like the permanent life insurance because I know that one day I'm going to pass away. I don't know when. It could be sooner, it could be later. But I do want to know that when I do pass away, my family is going to receive the death benefit, and it's going to be a financial blessing for them as well. So lots of different options. Be glad to talk with you about your specific situation and see which one, or if both, a term and a permanent policy makes sense, and how it would work for you and what the premiums would be and all of the ins and outs of it. So a lot of details, but just wanted to share with you a little bit today about a permanent policy and how it works. And then when you do give me a call, ask me about a permanent policy that has living benefits. And what that simply means is that you don't have to die to get some of the benefits from your life insurance policy. I'll explain that in another video, or just give me a call and I'll be glad to go over that with you. So I look forward to speaking with you. You can go to my website, bsnyderinsurance.com. I'm on LinkedIn, Twitter, Facebook, G+, however you need to get in touch with me, or simply call me. I love to talk on the phone too. So just give me a call sometime, and we'll get together and talk about your specific situation, see what makes most sense for you. Look forward to talking to you. You have a good rest of the day.